welcome the panel that will be discussing taxing the future, exploring the implications of Web3 blockchain metaverse, digital ID on taxation. So this panel, actually this roundtable will be moderated or managed by Michele Levine, who is a partner at Hamilton Locke. She will be joined by Greg Valles, Managing Director at Valles Accountants, Ray Wang, CEO of Luca Plus, Shane Brunette, CEO Crypto Tax Calculator, Maryna Kovalenko, co-founder of Kova Tax, and Syla, Danny Talwar, Head of Tax at Koinly, Joni Pirovich, Principal at Blockchain and Digital Assets. I can't remember what the L is, but I'm sure, Joni, you can remind me. I actually sometimes just call it BADASL, but I think it's, you have another term that you've coined for that. And Callan, Sarre, Director at CryptoCate. So without further ado, I'm going to welcome Michele Levine and her fellow roundtablists to the stage.
Thanks so much, Amy Rose. I'm really excited. I feel like this is a really good time to be talking about tax. We're getting to the pointy end of the year where tax becomes a really big issue when people start to think about, well, how do I determine my tax? What is my tax liability? Am I going to get anything back? So I'm really lucky to be joined by all these tax experts because I'm certainly not one myself, at most just a bush tax lawyer. So we're going to dive right into it and we're going to just ask the panel, what issues are they seeing? So I'm going to throw to Maryna first. What issues are you seeing when it comes to tax?
I think she's actually jumped off or trying to jump back on. So
that's okay, we'll go to Joni. I'm going to call your acronym, is it BADASL?
Yes, you got that right. But I take many different interpretations because the crypto punk in me, you know, for those that got into the space 7, 8, 9 years ago, you've got to have a crypto punk reference somewhere in your name. But that's a story for another time. Thank you for having me here today and again for all of the work being put in by the Blockchain Australia team. The tax issues that I'm seeing in the market are broad, and the ones that I want to focus on really relate to what I see as the heart of the issues, which is what is a DAO and what are these things we call smart contracts that can operate autonomously as they're programmed to operate and potentially with no human intervention. So that, as a question of law, is a really tough thing. Michael Bacchina referred to some of the great work by the UK Law Commission and out of NICA, but the tax doesn't necessarily need to wait for the legal approach. You know, we'll get into possible solutions later on, but we're really lacking clear and consistent application of tax laws because we don't know how to characterize DAOs, and including the Bitcoin network and Ethereum network, as a tax entity or not, and where it's tax resident. And we continue to try to deal with the low-hanging fruit of, is a crypto to crypto transaction taxable? How do you translate it and at what values? A lot of the people on the call today will go through all of those issues, but if we don't know where it's coming from and how we characterize that for tax purposes, then our tax framework starts to fall down and we're pulling concepts out of the air. So it is the hard work, it is the very complex and hairy work to try to characterize these things, but I think that it's necessary work and we possibly need some tax deeming rules to have these things make sense.
Thanks, Joni. Sorry, I forgot to have to drop my microphone to make this work. Let's jump on to Shane. What are your thoughts as to the issues that you're seeing in the tax industry at the minute?
Yes, I think fundamentally the problem stems from this idea that crypto doesn't inherently have a trusted third-party middleman to provide reporting. And so it's very common in crypto to transfer between accounts, this idea of interoperability. But when you go and do your taxes, you know, provide you with a tax report. And so you've got to try to gather that up from all your different centralized exchanges, but also increasingly more important is actually trying to work out what your transactions look like when you're doing all this on-chain activity, such as interacting with different smart contracts, dealing with different decentralized exchanges, DeFi protocols, taking out lending, staking on the blockchain itself, where there isn't any third party who traditionally could do any reporting. So that's where a lot of the complexity lies.
Danny, what are you seeing?
Yeah, so I guess just leading on from what Shane said, I mean, one of the things we're seeing as an issue in this space at the moment is really just the gap between what the ATO guidance says and I suppose the level of education and understanding of what crypto assets are, particularly for accountants who, let's face it, they're the ones that actually have to service the tax returns and their clients at year end. And, we're coming up to crunch time right now. So it's really, really topical, as you said, Michele. And so it's really about interpreting what the ATO guidance says, albeit, crypto is moving at a very, very fast rate. And so the level of complexity that people are getting involved with crypto now is far beyond, perhaps what guidance may reference. And so I know that is being worked on, and we'll probably jump into some of those points a bit later, but that's certainly, one of the gaps or one of the areas that we're seeing people talk about at the moment.
Thanks so much. Ray, what are you seeing in your space?
Oh, hi, thanks. Thanks, Michele. So what I've seen is, I think, definitely, I think the guys, the stuff that the guys mentioned before, definitely we need more clarity in the definition of all these securities and tokens and DAO. But and also to add into that is what I've seen is the lack of education from, I guess, both party. For example, right, how crypto business or blockchain business actually record those transactions. I think there's definitely need a better education on that. So could be like accounting knowledge or education on any digital tools to help them make life easier, and at the same time to make sure that the accurate data can be recorded in the accounting software. So when tax time comes, yes, we have those issues, but then at least at the same time, all the other things like report or data are ready when everything's ready. And also at the same time, I think in the long term, I think what I can see is I think we need like better collaboration that helps to create better rules for all the stuff we talked about before, and also implement the right technology to help improve the efficiencies from both sides to make everyone's life easier.
Thanks so much. Greg, over to you. What are you seeing in your space?
Thanks, Michele. I'm mainly about regulatory uncertainty, and I think you see that manifesting in the US. We as accountants have to make some judgment calls. We use what's reasonably argued position on fair. I think the ATO and Treasury government has to look at this whole Web3 scenario and stop trying to fit it in archaic tax laws. There's a perfect opportunity now for some major reform, and also for us to be cutting edge around the world. So I think that's a great opportunity for government at the moment to do that. The other thing we've seen is cybersecurity. We're seeing a lot of people threatened with scams, or seeing that other accounting bodies, accounting accountants don't understand the whole process and come to us to assist. So cybersecurity and scams and people not understanding what's real and what's not, it's giving the industry bad actors, a bad name, and we understand that they're solid, effective, and we can see that in blockchain week with the turn up, given the crypto winter that we have, that everyone's really turning up and showing up and believes in it, and we're here to start. So yeah.
Thanks so much. I don't think Maryna's on the call, so we might just go to the next question. What do you see as the low-hanging fruit? So I'm just going to shoot around the table again. Maybe we'll just go in the same order just to make it nice and easy. Joni.
Well, it's a contradiction of sorts. I think that in dealing with the hard issues first, that would produce a lot of low-hanging fruit. And one of the things I'm working on at the moment is some data standards for DAOs. So I'm engaged by DAOstar, which is a not-for-profit organization based out of the US, and it has about 80 or so of the largest DAOs and DAO tooling providers in the world. And I lead the regulatory interoperability group there. And what we're trying to understand is what are the common sets of or pieces of information required for your interactions, your crypto token activities with a DAO, and what basis of information reporting could be produced or readable from the data that is produced by those smart contracts, that mean Etherscan becomes easier. It's more crypto tax accountant friendly. It becomes even more lawyer friendly, because if you're collecting the correct data, or the data that the legislators and the regulators and customers and stakeholders want to see, then if that data is real-time available and available in the public, then more innovation is possible around understanding that tax information in real time and being able to comply with, as an individual, your tax obligations, as a business, and even from the perspective of the DAO, we're getting into really cool concepts of auto tax calculation and remittance to escrow contracts for tax authorities around the world, should the tax laws see fit to move in that direction, which could be years away, but we're working on those standards now. So really exciting, but hard work ahead.
Thanks, Joni. I was really bad. I missed Callan, so I'm going to ask you both questions, Callan. I'm really sorry. One, what are you seeing the issues? And two, how are you going to solve it with your low-hanging fruit?
Yeah, thank you, Michele. Yeah, issues that we're seeing in the space do come from a similar place from the client perspective that the crypto tax software see. So we have a general lack of data quality across the space. And I think there's an opportunity to really unpack some of the common scenarios that we see in on-chain interactions, such as a specific contract interaction as a liquidity deposit on Uniswap, for example. We have this deterministic function that millions of users use on a regular basis that we can unpack in quite detail and get specific on. And those kind of examples could be really helpful, especially as a low-hanging fruit case study. It's something practical that we can dive into and use as an example to help guide some issues. I think that one of the key issues we see as well is the classification of traders and investors is a really common question. People are doing all kinds of on-chain activity that could be deemed to be quite sophisticated in terms of traditional finance. But from a user experience perspective, it's this glossy dApp, and it's very easy to interact with, and they're not really aware that that might push them from a hobbyist into something a little bit more sophisticated. So a bit more clarity around what kind of activities are appropriate and what kind of volumes for that classification, I think would be really, really helpful.
That's really interesting, Callan, because it seems from our earlier discussion when we were preparing for this that the threshold in cryptos and the bar is actually set a lot lower in terms of who's considered a professional, in terms of income producing activity, such that you move from what is on capital account to revenue account quite easily. And I think Joni even mentioned that it's even done retrospectively from like initial date. So that's a really interesting point. So thanks for that. We'll go to Ray. What do you see as quick wins?
Quick wins from my side. I'm still coming from a more like a accounting transaction perspective. So to make those guys' life easier, like lawyers, accountants, I guess what we can do as a technology and product services provider is to implement much more efficient technology. So for example, we are actually closely working with ATO at the moment, trying to promote some technology called e-invoice, which is actually allows business to transact directly with each other across different accounting platforms, which means, if you create an invoice in Xero, you click on the send button, the other party, if they use another accounting software, like could be MRB or QuickBooks or SAP, they're going to receive that invoice directly into their software without manual handling on the transaction processing. So in that case, it makes everything easier. And on our platform, we process everything through blockchain. and create a hash, and then also allow them to settle that transaction with the crypto. So in that case, we can actually help to make this whole system much more transparent and easier to reconcile. So and hopefully that can create some synergy from both parties. And then when they want to audit anything, they can just say, hey, oh, everything's been processed on blockchain, got paid by crypto, and also make it easier for the business owners or accountants to check everything too.
Thanks, Ray. Shane, I'm going to head over to you now.
Yes, I think a common strategy for other industries is for the tax office to enforce reporting standards when it comes to tax. We're seeing this happen in the US, applying that to crypto. I don't personally think that's the right answer ultimately. You could probably have some sort of standard reporting structure for centralized exchanges. But to the previous point, there isn't a trusted third party when it comes to these on-chain transactions. And actually all the transactions are already recorded on the blockchain. We just need to be able to interpret it appropriately. And right now, all these transactions are publicly visible. The tax office can come in and have a look at them. They just obviously need the right software to be able to do that. So I think there's a lot of opportunity to change the way that we can think about collecting tax or keeping tax records when a blockchain is actually involved, rather than going back to, what was historically the right approach when there's just a central database with many different entities, trusted third-party entities.
I guess the challenge as well is when you have DAOs and they're decentralized and they can access people from everywhere, it's really complex. So I guess bake into the smart contracts a tax position, because each country's tax laws would be quite different. Like I'm probably speaking a little bit out of, so I think there's only so much you can do in terms of baking it into the system itself. I think it's probably what you're saying, Shane. It's the capturing of it and then the interpretation of it on the back end of it. And I think that's a really interesting space. It'd be really lovely to see someone design some technology that could make that really, really simple and easy. Danny, let's go to you.
Yeah, so I suppose in terms of quick ones, I mean, it's just around filling some of those gaps at the moment, perhaps that might be felt by industry. So, partly on the education side for accountants, helping with a bit more examples on how to navigate scenarios for their clients, particularly as we've kind of discussed, there's lots of different types of transactions that happen across many, many different wallets and exchanges. And so, having more nuanced examples with regard to that would, I suppose, be a quicker way to get some level of consensus. But I think, really, that there's I think we've covered already, there's a huge amount of complexity and issue on the tax side of things. And so, that there is also the kind of reality that a lot of this won't be a quick fix in a way. And, these really tough conversations do need to happen to get to the right outcome. And I think the other thing to note is this isn't just an Australian specific piece that we need to consider. It's actually global, because there's a couple of issues. One is making sure that when we tax transactions, it actually makes sense to tax them at that point. What does the economic substance of that transaction actually align with when a taxing event is triggered? And I suppose the second is, well, do we get consistency amongst our international regulations such that we don't end up with tax treatments that are slightly odd in the context of perhaps US, UK, Europe with their micro reform. And that ultimately will be factored in by businesses that seek to come and invest and innovate in the Australian market as well. So those are the kind of bigger, broader considerations that I'd also add.
I'm going to jump to Maryna. She's joined us now. We're talking about what you see as the quick wins for the industry, given some of the issues that we've raised. What do you see as the quick wins?
Thanks, Michele. Hi, everyone. I think what we see is that accountants are actually really have a lot of challenges. Like we're facing the challenges of completeness of the data, and that even coming from the platforms. And like one of the examples is like we see that there is like limitations on the API. It may say that, okay, the information is not available like before this specific date. And that is like arbitrary kind of limitations that shouldn't be for taxpayers. So we think that there is like really no standard for platforms how they report the information. And that is the main challenge, because doesn't matter how good we are at tax. If we don't have the good quality data, we cannot calculate the right tax. And this is the main message about the challenges that we face right now in our industry. I think that also classification and identification of the transaction is like one of them, where we see the deposit, but no one knows like which kind of deposit it is. Is it airdrop or interest charge or anything? Could be a lot of interpretation issues. This is the main challenges in our industry.
Thanks so much. And Greg, to round us out, what are you seeing as low-hanging fruit?
I think my esteemed colleagues are covering it pretty well. And we find in this industry too, there's a lot of love in terms of that information sharing, more so than any other industry I've seen. But I think that the quick win is enhanced regulatory guidance. We just need some good frameworks as to what. And I think Maryna talked about good data. That's exactly right. And I think this implementing standardisation and user-friendly tax reports, we should have that available to us, and that their tax office can clearly audit. And we try to say to clients that the ATO is getting much better with what they're trying to get in terms of their investigation skills. And if they don't have it now, they will have it in time, and they'll be able to go back. So we have to make sure that we get as clean data as possible, so they don't have any recourse for those clients. So, you know, we've been trying to advocate a lot of that in the, without a scaremongering, but just as a protection mechanism.
Thanks, Greg. I think we'll sort of put the last two questions together because I think they actually go quite nicely. I'm going to throw it to the panel. How do you think our regulators and government are doing at the moment, and what lessons can we learn from offshore? And so I'm just going to round it up. We'll go to Joni first.
Sure. Well, we've had the Board of Tax be engaged to do a specific taxation of digital assets review, which was fantastic. Unfortunately, that work was supposed to be finished and reported on in December last year, and there was an extension approved until the end of September this year. So unfortunately, we have to wait a long time until that report comes out and filters its way through the Labor government, whether the government agrees. And hopefully there is some really good suggestions and recommendations that are taken up by the Board of Tax and then the government. But my dealings, I act for some taxpayers in ruling processes that have been going for years, audits, as well as tax litigation. And I'm sorry to say that it's not good news. And just to clarify the point that you made earlier about, well, I think Callan, actually, Danny, you were bringing up the point, this revenue capital characterization and whether a person begins to be carrying on a business or is undertaking a profit-making undertaking or scheme. Now, we're seeing some very worrying approaches by the Commissioner in the audit, a particular audit actually, where the taxpayer is being very accommodating in producing both the blockchain information, the public blockchain information, such as from Etherscan, and further spreadsheets and worksheets to explain, you know, what that Etherscan transaction summary means in the context of the taxpayer. Now, the blockchain boils down to about 1,000 transactions over 6 or 7 years, but the substantive transactions is really only about 200, which is less than a transaction every fortnight. And unfortunately, the Commissioner and the review team have taken the approach that the upper number is to be taken as the input to a taxpayer carrying on a business, rather than looking at the substantive lower number of transactions. And as we all know on this call, whenever you spend, Ether on the Ethereum blockchain, you also spend some Ether for gas. So that's 2 transactions, but the gas is your payment to play, or your brokerage fee. And sometimes when there are multiple functions in a smart contract, there can be 4, 5, 6 other signing transactions which inflate what your activity actually looks like. And notwithstanding explaining that, the commissioner continued to assert that that high number was one of the heavily weighted indicators of the taxpayer being in a business, and that there were a higher number of transactions in one of the later income years, and the commissioner has applied this retrospectively to say, you were in business or you had a profit-making intention all the way back to 2012 or 2013 or whatever it was, because of how you're using and how your activities are now, essentially. When, as we all know, it's an income year by income year test that is dependent on the facts and the circumstances of each year. And so there's some quite ludicrous outcomes that these poor taxpayers are having to defend, because there's no specific guidance on what constitutes a crypto token profit-making scheme or carrying on a crypto business. So those are just a few of the war stories, and I'm sure that others have many others to add.
Thanks, Joni. I'm going to quickly round out because we're running out of time. Ray.
Oh, okay, yeah. Definitely. I've seen a lot of things that what Joni has described before, but I think what I believe is always like a win-win situation, right? I mean, like for example, right, I think from how I understand it, ATO sometimes has some tax special treatment or rulings based on some uncertainty cases. So my question is whether there's a chance for us to really sit down with them to say, hi, is there a way that we can sort of do something like that, right? And to just make everyone's life easier. And I guess what we learn from the overseas is, I think a lot of overseas countries are actually doing so much better than what we have been doing in Australia. So can we actually also set as an example to do something quite innovative? Just to maybe like a settlement of, okay, we'll pay about 10 or 20% based on what they believe we should pay. I'm talking about tax, but at the same time allowed crypto investors or traders to pay tax with things like CBDC, because RBA is trying to implement CBDC, and in that case, I think we can create some synergy from both parties. It's going to be good news to announce publicly, and to improve the trust and transparency from both sides. So I think that's my view on that.
Thanks, Ray. Callan, what do you think? What's your view on our regulators, and what do you think we can learn from overseas?
Yeah, I think from a regulation perspective, we have this amazing opportunity to get deep into the blockchain side of things. And we talk about poor data in crypto, but we have the best data that there is on chain. It's a complete data set, and it's always been complete. So we have this data set that we can dive into and unpack. But I think what really is the challenge is this kind of qualitative difference in decentralized technology to the traditional sector, I suppose, in that we can, it's really hard to say, but as something as simple as who owns this wallet in the eyes of the tax office. And I think that's something that Shane is mentioning as well, in that we have a self-managed super fund or something, and they've got on-chain assets, but Satoshi isn't writing them a statement in order to provide to the tax office. So if we can progress the needle and help to understand that a legal entity can possess the wallet, and we can provide that cryptographic proof of ownership, then I think that's moving the conversation a little bit further along. I think that's a great opportunity. And what can we learn from overseas? I think an embracing of the technology, I suppose, is my answer to that question. And trying to interact on the technological level instead of necessarily mapping everything to the traditional traditional way of looking at things, and seeing that there is something new and novel happening here that does need to be reclassified and understood in a deep way.
Thanks so much, Callan. Shane, let's go to you.
Yeah, so the ATO was one of the first to provide fairly detailed information on cryptocurrency, and the guidelines that they provide on their website were leading at the time. I think the issue with the website is that it's not binding guidance, is that that's something we hear a lot of from accountants. Obviously, they can be updated at any point in time. And I think there's a lot of opportunity, especially over the last few years, to do a more detailed analysis of the crypto space. We've spoken previously around this concept of the transaction mapping exercise. So rather than a token mapping exercise, you actually go through and pull up some example transactions that do occur on the blockchain, such as, you know, a deposit into a smart contract to receive a loan, a direct swap of crypto on a decentralized exchange. There's all types of example transactions that you could go through. And I think that would be really helpful for the industry if they had some sort of transaction mapping examples, either on the website itself, but even better would be some sort of binding guidelines.
Thanks, Shane. I guess you know, my experience is in the regulatory space, so more in the sort of, there's like the token mapping is going to be quite critical for some of the stuff that we're doing. I can see how transaction would be too. Greg, what are your views on sort of our current sort of regulatory government positioning when it comes to tax, and what do you think we can learn? And are there some jurisdictions that you think are sort of leading this space that we should really, you know, be piggybacking off?
Well, it's twofold, Michelle. One of the things is regulatory clarity, and I think we've got to be aware of not trying to see what happened with Coinbase with the SEC. They went and asked what we should do, didn't get clarity, and then got prosecuted. We just can't have that happen. I mean, it's just a bad taste for everyone. So governments around the world have got to be very conscious of doing that. When someone's coming up and asking us, help us, and that's where I started back, you know, 2016, 15, people, the smart ones knew what they didn't know, and they came and said, listen, we want to be in the system, tell us how to do it, and we want to do the right thing. And the majority of us want to do that. And the government's got to understand that. And most of the industry don't want to try and avoid. There's great places like Switzerland and Malta that are doing it well, encouraging their cryptocurrency world. There's the Japanese with their cryptocurrency exchanges. They're just a great monologue and assisting. We've got to have that wonderful open dialogue and assistance, and people are trying to work out what's the best avenue for that. And you know, we as a collective are the spokespeople for that, and Blockchain Australia.
Thanks, Greg. Danny, what are your views?
Yeah, so I think it's probably worth just thinking what is actually, you know, happening overseas. And you know, I don't think we're in a terrible place from you know, a regulatory perspective, or you know, particularly with any guidance that's out there. And you know, the way we say it, the basics are very simple and clear at the moment. And so if you are spot trading with crypto, generally, you know, bar a few nuances, you can get to a reasonable level of comfort with the tax treatment that you apply. And you know, when I say you certainly, if you're using an accountant that understands crypto, then that will be the case. And you know, your challenge is likely to be focused around the record keeping elements of, you know, making sure you're actually up to date with keeping records, which, you know, a lot of people actually do forget when it comes to tax time. It's all very well knowing, oh, I've made a gain of X, or I have a capital loss of Y, but being able to substantiate this is really crucial. And you know, I always hear this as well from a lot of the lawyers in this space who are actually dealing with you know, the tax audits and you know, in the thick of a lot of these issues where evidence is really important. And so it really is around the more kind of complex transactions where we don't have that clarity, and so that will come with Board of Tax reviews. We will look to token mapping exercise, which has been undertaken by Treasury. As you know, as Shane said, it'd be good to have a matrix or some type of kind of transaction or crypto list that we can derive to understand, you know, how crypto assets are actually categorized. But turning, you know, to other jurisdictions like the UK, they're reviewing their DeFi regulations at the moment. So particularly around lending and staking, they're looking at how they can actually simplify some of the taxing points that occur when you do lend and stake crypto. And so, you know, we were talking about some of the issues earlier being multiple taxing points, and I mentioned a little bit around having the economic substance that kind of aligns to when you have a taxable event. And so that's one of the things that's being looked at the moment in the UK. We obviously are in kind of different regulatory focus at the moment, with waiting for Board of Tax to come through before really any significant changes is brought through. And so a lot of eyes are on that at the moment with industry. You've also got in the US, you know, more and more clarity being provided on some more nuanced issues. So, you know, for example, when centralized exchanges collapsed or something collapsed like FTX, we had some uncertain tax positions around the claiming of losses around, you know, if you had your funds on those platforms, what happened. And, you know, there was on one hand a lot of legal work going into that. So, you know, what is the actual position? And, you know, the US did clarify in some cases that if you haven't lost your crypto, you can't claim that capital loss if it's uncertain and so on. So there are different approaches that are happening, and just that awareness is important to actually drive that further change in Australia as well.
Thanks, Danny, and to you, Maryna. What are your views on sort of the local regulatory environment here and what's happening overseas?
I think the main message from the taxpayers in Australia to the Australian government is that we do want them to be more proactive, rather than looking what's happening overseas and waiting and waiting. So we do really see that it just becomes economically unfeasible for a lot of taxpayers to do some like $200 investments, let's say, in liquidity pools, and then pay thousands to professional fees just to clarify what the tax outcomes should be. And this is the main message for the Australian government, that we do need to make sure we don't lose our talent to buy Singapore or some other European countries. That's what we need to do. We need to get more guidance, and we don't want binding guidance. And that's our main message.
Thanks so much. I'm going to throw another question. It's probably a bit of a technical question, but do you see tax residency as a big issue when it comes to decentralization? And do you think the tax treaties are actually a useful source for resolving this? That's a very complex question, but it's getting me thinking about DAOs. And if we actually start defining what a DAO is, and we treat it as a taxpayer, whether it's look through or not. I'm thinking of fund trustees as an example. How are we going to deal with double tax? And I've thrown this out there. I know you guys, we haven't talked about this before, but I thought it might be an interesting issue, just given some of the points that have been raised. Let's go to Joni first.
Yeah, the tax advices I've been doing over the last 12 months are around Australians leaving Australia to go to more favourable or friendly jurisdictions. So having interpreted Australia's double tax agreements with those other countries, it is a mess. And we're getting into awful double tax situations where you cannot clearly allocate the taxing rights as between countries. And it really, a lot of it is boiling down to, it's very difficult to understand the source of the income or deemed income from a crypto token activity, because a DAO is everywhere and nowhere, perhaps. And it's not even a static analysis to say, oh, the DAO might have majority of token holders in the US at this point in time, because the next day or even the next minute, the composition of token holders, if that's the input to your tax analysis, that can substantially change within an announcement. And for example, the US token holders, you might see a massive sell down, and then there's a concentration of ownership, for example, in the Asia Pac region or in Japan. So it's very fluid, very fast, and very difficult analysis. So we're struggling a lot with it, with the double tax treaties.
Maryna, you had your hand up. Did you have something to add?
Yeah, it's exactly where we at. It's a cutting edge question still, and the government, I think the tax office is not really been thinking through all these problems that really right before us, and we have to really deal with that. Yeah, international tax is normally complex by itself, and when we add crypto to that, it just becomes impossible to solve without the regulator to also participate in conversation, so that we have some certainty in this case.
Thanks, Maryna. Does anyone else want to talk about that before we sort of round out? Callan, go for it.
Yeah, I would just add that it is absolutely a consideration for blockchain projects as well, in terms of where they incorporate. And we see that with every single DAO essentially incorporating in some tax-friendly jurisdiction. And I think that's a missed opportunity here in Australia to create a framework or a sandbox, something mentioned in the previous session, where people can innovate with these new models in the bootstrapping phases of these massive global networks, if they are kind of, beholden to these tax obligations while there's no regulatory clarity, or their model as a DAO and as a decentralized network is not established. They're going overseas to have that flexibility in order to innovate. So I think it's really important to create some kind of environment where that can take place in Australia.
Thanks. Does anyone else want to add before we round out our discussions? Danny, Greg, Shane, Ray?
I just think that we understand there's problems and we've identified issues, but at the end of the day, we've got to make decisions. And we have to make decisions that are measured, calculated, and reasonably argued. And we use great lawyers in that sense to do that as well. But I think try and protect yourself as much as possible. And if you're in doubt, just make sure your working papers, your lawyers, and everything is covered. And particularly if you're at the big side of things and you've got a lot to lose on it, you need to be smart about getting that cover, because you will be exposed, and not knowing is not an excuse. You've got to be able to make a reasonably argued position.
Thanks, Greg. Joni, you had something else to say, sorry?
Just to riff off that, we're seeing this play out in the UK with the DeFi staking and lending that Danny was talking to. The proposed law reform is that the new laws won't apply retrospectively, because effectively people have lodged tax returns and claimed losses on these, what has been uneconomic. But what's silent is that other people have lodged their returns not reporting gains. And it looks like the HMRC won't apply compliance resources to looking back if you haven't disclosed gains in accordance with a perhaps preferable view of the law before the new rules came in. So we've got these really hairy transitional things, and a not clearly stated no compliance resources will be applied to previous year tax filing positions. But this is the exact thing that we need guidance, an administrative approach from the Commissioner, possibly with support from the government or recommended by Treasury, to avoid people trying to do the right thing, spending a lot of money, paying tax on gains, when actually the compliance approach will be, if you didn't report gains, then we won't go after you anyway. And that's unfair, and there should be fair notice and a simple administrative approach, hopefully recommended by the Board of Tax.
Thanks, Joni. Well, that's time, guys. So I think what the message is that tax is complex. It's still a work in progress. We still need to keep pushing the envelope. We need to make sure that HU has the bench strength in order to be able to build this up and create a system that's simple and effective. So I'm going to pass it back to Amy Rose. Thanks everyone for your participation and your guidance and your expertise. Loved it.
Thank you so much, Michele, Greg, Ray, Shane, Maryna, Danny, Joni, and Callan. I'm so glad that it's recorded because that's going to take a lot of absorption. So that'll be online next week for anyone who wants to rewatch that. Thank you, everyone, for joining.